All right, what's going on, everyone? Hope you guys are doing great. And hey, I had to hop on and start a conversation around this. There's a post going around on Facebook and probably YouTube and maybe even TikTok, who knows, that suggests that Nancy Pelosi is insider trading. And hey, listen, I mean, is it possible? Absolutely, is it possible? Is it true? I don't know. Just because someone does better than everyone else doesn't mean that they're insider trading. Here's the post right here. Carolyn Levitt just exposed Nancy Pelosi's insider trading. Pelosi makes $174,000 a year. I feel like that's low for her level of access in the government. But her net worth is $413 million. Yeah, that's a lot of money. That is a lot of cha-ching, a lot of change. Curious what her husband does. I believe he's in finances as well, so there might be some advantage there. Okay, this is the part I want to talk about. In 2024 alone, her stock portfolio grew 70%, beating every single hedge fund and even Warren Buffett. Okay, so because you do better than the stock market, does that mean that you're insider trading? I mean, like, I'll let you know a little secret. Like, the Generation Wealth Investment Club in 2024, we did 80%. So not only did we beat every single hedge fund out there, not only did we beat Warren Buffett, which I'm going to talk about that in a second. It's easy to beat Warren Buffett. We beat Nancy Pelosi, and guess what? We're not insider traders. Like, we've got a technical system that we use. We buy category kings, great companies, and we take the momentum and we make a lot of return. Now, does every single stock we buy do amazingly well? No, some are a little sluggish. Some kind of get sluggish over time, but we've got a lot more high octane performers than we do sluggish underperformers. In fact, every stock we pick is an outperformer of the market. That's the mandate of the Generation Wealth Investment Club. Basically, I tell people that when they join, I say, listen, if you can't beat the market, you might as well join it. Go buy an S&P 500 fund and you will average the market, right? Our goal in the Wealth Club is to beat the market. That's why we're doing this. That's why we're in it. We're in it to win it. We're in it to beat the stock market, and not just beat it a little bit, but like slay it. So Nancy did 70% last year. We did 80. Womp, womp, womp. I'm sorry to say it's not insider trading. It's just making good moves on good companies. Okay, understanding, we got a system we look at to help guide us. Are we in a bull market or a bear market? Well, if we're in a bull market, we're buying. And we've got some great companies here that have done really well for us. In fact, let me show you a few. Okay. I've got right here on my dashboard. So there's 2024 right there. Okay. There's 2024 right there. That's January 2024. Okay. And I'm going to average it out. We've got a whole bunch of stocks here: Reddit, Palantir, Him and Hers, SMR. I got Bitcoin on there, which Bitcoin has done over 100%, right? So Bitcoin alone in 2024 did over 100%. So, I mean, it's not hard to beat Nancy, who's doing 70. Bitcoin alone did 100 plus. Axon, Nvidia, and there's a whole bunch of others. But you can see here, like 2024, which would have been right about there, our best performing stock did 264%. Hello. Our second best performing stock did 211. Our third best did roughly about 184. Our fourth best, 161%. Our worst performing stock was actually negative 50%. Wow, wow, wow. That was Celsius. And that's not actually too bad. I mean, Celsius, since over the last 5 years, has averaged 6,000%. So for a year that it goes lower, yeah, it sucks, but it's okay. It's not a big deal. All right. But yeah, most of our stocks were 100 plus, even 200%. Well, guess what? Since April of this year. So what happened this year, for those of you that are following the market, you'll know. For those of you that aren't, Trump got elected, and he came into office and pretty much tariffs completely shook the market, shook the average investors. Wall Street played on your fear and took the market down huge. And what I do is I've got a technical system that I look at to kind of help me guide if it's time to get back in. So we got out for most of that pullback. And we saw end of April, the opportunity to come back in. We were getting those signals. It's time to come back in the market. Well, since then, okay, Like, you want to talk about, you think Nancy's doing good at 70%. Since the beginning of April, let me just scroll over here. The beginning of, or not the beginning, but the end of April. Check this out. There's some, like, most stocks are up, not most stocks, a lot of stocks that we own, 100% return plus. There's April right there. There's your bottom of April 2025. Okay, again, I'm going to average in the middle there. There's Celsius, by the way. Celsius is the biggest grower since April 2025, up 205%. Palantir's the next, 136%. Then we start to kind of move down here with some of the other ones here, 90%, and then 50% on some others here. And then the lowest performing one did about 30% since April. Every single one has just kicked butt really nicely. It's kicked butt really nicely here, but some good performers have done 100, even 200%. So, do I believe Nancy Pelosi is insider trading? I kind of wish she was, and get caught and go to jail. No, she's not going to go to jail for any of that. Let's be honest. But I don't think she is. I'm just going to say that. I don't think he is. Just because someone outperforms you in the stock market doesn't mean they're insider trading. It probably means they have a better system than you. It probably means they're buying better companies than you are, or your financial advisor is, because most of you have financial advisors. Okay, it probably means they're not buying mutual funds that are just sucky, blah. Like, mutual funds just suck. They just suck. So if you're in mutual funds, you got to ask, why am I in mutual funds? Why do I overpay for underperformance? That's the question I always ask. Right? So they're probably not in mutual funds. And we're probably, and Nancy, like myself and many others, we're probably buying great category king style companies, meaning the best of the best. We don't diversify into 1,000 companies like a mutual fund will, or a mutual fund will do a couple hundred. We don't diversify into 100 companies because we know, we just buy the best of the best. We buy the top 10, 15, 20, maybe the top 30 companies in the world. And when you do that, you're not guaranteed to have 100, 200%, or 7% year over year, or in 1 year. But the likelihood of you getting there is a lot more higher than you buying mutual funds. Heck, I've got ETFs that since April are up 200%. ETFs. Like, they're the next best thing after mutual funds. Right? Like, and if you don't know what mutual fund is or an ETF is, basically mutual fund is usually you go to a financial advisor, you give them a bunch of money, they're licensed to invest into mutual funds, and a mutual fund basically is a fund that you invest to that holds sometimes 100 companies, sometimes 200 companies, right? And holds all these companies. Usually your top 5 to 10 companies in a mutual fund are great outperforming companies. Your bottom, basically, 11 and onwards are usually not great, and they pull the mutual fund down. So you might be in a great company in a mutual fund, but because you got so many what I call bottom feeders in a mutual fund, your mutual fund's returns suck. And so you overpay for underperformance. Your advisor, in my opinion, most advisors aren't great. They're getting their information from other advisors or their company's guy, as they call it, the company's guy, the information person. Where if you just dump the mutual fund and bought your top 10 companies in a mutual fund, generally speaking, you're going to do a lot better than the mutual fund. Like, that's why I fired my guy a long time ago. Generation Wealth Investment Club, they're firing their guys because we're just doing so much better, and we're not paying all the hefty fees that most mutual fund guys are going to charge you. Right? Check this out. This is the difference between a high performer and a high performing fund and a low performing fund. Okay. Let's just say you're 50 years old. Okay. I'm going to run the numbers from 50 to 60. Let's call it 60, 65. That's 15 years. Okay. And let's just say you were able to find an extra $500 a month. Okay. Most mutual funds will underperform the market here. So your market has averaged 10.4%. Right. So most mutual funds that I've experienced are doing 8, 9, 7%. Well, at 8%, that grows to $173,000 over 15 years. $500 a month, averaging 8%. That's your average mutual fund. The stock market has done 10.4%. Now, some years it's going to do 25, 30. Some years it'll do negative 10, but it averages 10.4. If you can average 10.4 for 15 years, that's $215,000. That's better than your mutual fund, right? Not bad. But what if we could actually get into companies that are just stellar performers? Like I said, Celsius is a company that's done 6,000% over the last 5 years. A $10,000 investment into Celsius you'd be a millionaire. Okay, now that's one company, that's one example. It's hard to play the one company thing, but what if you could average 25%? 15 for 15 years, that's almost $1 million. Literally, that's 957. You're literally $40,000 away from being a millionaire. $500 a month at 25% over 15 years, you're 40K away from being a millionaire. Well, what if you could do? I've got a fund that since 2008 has averaged just over 30%. And it's actually an ETF. So that's the great part about it is you get the diversification through the ETF. 30% at $500 is $1.6 million. You'll be a millionaire within 15 years. In fact, you'll probably do it, let's see here, probably by year 13, to be honest. Yeah, like in year 13, between year 13 and year 14, you hit that $1 million mark and surpass it. I've got another fund that's done roughly about 38% since 2008. Again, at $500 a month over 14 years, that's $2.9 million. Right? Like, yeah, Nancy Pelosi has a lot of money, but maybe she's just doing funds that are getting her 30%. You know, there's other strategies like options and stuff like that that will easily double your money in a short period of time if you do it right. Is it possible she's just smarter than most people are? You know, that's the way I see it. You know, maybe there's insider trading. I don't know. I mean, she does have high level access, you know, in the government and all that. But hey, you don't have to be in the government to do well. Generational Wealth Investment Club, our goal is to beat the market. Averaging client right now is doing roughly about 20-25% year-over-year returns. Some of us are doing way more than that. Some of us are doing a little bit less than that. Right? But that's our goal, is to outperform the market. At 30% takes you 15 years to become a millionaire. What if you just bought into the 3 or 4 ETFs that we do that average 30 to 50%, some stocks that have averaged 25 to 30 to 40%. All right? These are great companies. These aren't risky companies. And you buy and just keep buying them every month. And you can average that 30, 40%. Well, you're a millionaire within 15 years. Okay, so if you're in your 20s and you're listening to this, you're a millionaire before you're 35. You can retire at 35. If you're in your 40s and you're listening to this, you're a millionaire mid-50s. Freedom 55 is still a thing if you can take this information and apply it to your life. That's the difference between information and transformation. Everyone listening to this podcast right now, you're going to get a ton of information, which is great. The question is, will you apply the information? And if you will, now you get the results. If you won't, then you know you're just digesting information to poop it out the other side, I guess you could say here. But that's what we do. So listen, Nancy Pelosi, insider trading? I don't think so. Generational Wealth Investment Club has actually done better than her in our returns, and we don't inside trade. We got systems in place to let us know when to buy, when to sell, and basically what companies to buy. And when we follow that system, we do well. Okay, so if you want to learn more, description below. Okay, I've got actually a couple videos. One is how to outperform your financial advisor. How to outperform 90% of financial advisors, even if you're a complete newbie. That's right. If you have no experience at all, I got a video here that's going to show you how to outperform your financial advisor, even if you're a complete newbie. Okay, we got another video I'll link below as well. 3 ways Visa is building my $1 million portfolio, and they can build yours as well. So I'll give you that video as well down below here. But listen, doing well in the stock market isn't hard. And by the way, Warren Buffett, it is not hard to beat Warren Buffett. I know he's like the Oracle of Wall Street, and he's revered and written a bunch of books. And listen, the guy's great. Like there's no doubt about it. Investing, greatness. But it's not hard to beat him. It's really not. It is really not hard to beat him. And the fact that you have less money than he has actually makes you more maneuverable, and you can get in and out faster than he can. So you can take, nice runs. He can't do the same moves that you can make now. So you can actually do way better than Warren Buffett. That's not hard to do. That's not really a great comparison in my opinion, but anyways, it is what it is. People are trying to smear Nancy right now. And by the way, I'm not a fan of her either. Like if she's insider trading, she needs to go to jail, hands down. But I kind of wonder, because we're doing better than her, if she's just really good at what she does. maybe your husband's just really good at what he does, and they do what we do. We buy great companies, right? We don't get scared when the market falls, which is what happened this year. February to April, the whole market dumped. People were scared of the tariffs, the big bad tariffs, and Wall Street took advantage of that, took the market down. And I'll just be honest, when there's a lot of fear in the stock market is when I start to get excited, because I know it's about time to start to put on our positions. And that's what we did end of April. Our signals came back to get in. End of April we did, and many of the companies we've bought are up 100% since we bought them in April. So that's roughly 4 months as I'm recording this. 4 months to make 100%. That's not bad. Will we do it every 4 months? No, we won't, but there's a good chance we will outperform the stock market, and there's a great chance you can do it too.